All right, so for a trend trading strategy like HPLR, the first thing is to determine the trend. This is just a review of what we did yesterday. So find a method of determining the trend, either by the use of an indicator or pure price action or sentiment, as the case may be. So when we discover that the trend is bearish, we try to find these purple boxes that range for a possible sell. And there are several ways we do it that are woven around price action. And we call it the HPLR. Yesterday, we looked at one of the methods, which is called the weekly trade. We call it the weekly trade because we intend to catch a weekly ADR, average weekly range, right? ADR is actually daily range. In this case, we are trying to catch an average weekly range. So if on an average, a pair will move 300 pips in a week in one direction, gross, it may move more. Let me give you an illustration. So in a week, you could have a pair doing something like this. Then closing, started here, and then closed here, right? The range for us is the highest point to the lowest point. So it may consolidate, move, pull back, then finally come and close somewhere here. This is the close. The range for us is this distance. That is our range. So when we trade weekly trades, we are trying to catch at least 3/4 of this range, this movement. That's what we're trying to catch. Right? So we expect that when we get in from here, price may move and at least exceed this point for it to be a downtrend. That's what we're trying to do in a weekly range. So we frame out the fact that how do we determine this purple box? We said, number one, in the week under consideration, that point has to be the high of the week in the case of a sell, and a low of the week in the case of a buy. So for a sell, it has to be the high of the week. We never can say specifically what the high of the week is. So we use previous day's high, or what we call yesterday's high, as a point of reference. Now, today I'm going to explain why we use some of these terms, and I'm going to show us an indicator that we'll explain in detail, maybe second or third week. But just to help you understand why we frame these things and why we arrive at them. Price, when you look at charts normally, there is the tendency that you can get lost. In fact, if you are new to trading, or if you've traded several strategies, you've tried your hands on several strategies, yeah, James, thanks. So if you've tried your hands on several strategies, you have this mental block where you get into the chart and you're lost, right? It happens to several traders. So what we try to do is that we pick fixed points that are not movable, and we try to wrap our strategies around them. So yesterday high or previous day's high is fixed. Yesterday high is history, so that price is fixed. It doesn't change. Then we can easily frame our strategies around it. So for the high of the week to be formed, it has to take previous day's high. Then we now wait for certain candlestick patterns to give us a signal to sell. So we looked at last week, yesterday. We'll quickly look at this week and see what has happened so far this week. And then I'll show you guys an indicator that we are creating to help us trade these strategies without us lifting a single finger, right? And what we call optimization. So I'll take this down and go back to the chart. So like, if you remember what we did yesterday, sorry, just a moment. If you remember what we did yesterday, we started out by determining the trend. So for NZD-USD, for instance, the trend here is bullish on the daily. Again, remember I mentioned yesterday that your trend, you could determine your higher time frame trend by either using the daily or the H4. I don't advise the weekly except if you're a swing trader. Daily and H4 is okay. So on the daily, the daily, NZD-USD, for instance, is bullish. So what do? We go down to a lower time frame, let's say 30 minutes. I'll begin to look for our conditions to be met. First condition is that it has to take out the previous day's low. And the second condition is that it has to be the low of the week. So Monday started, this is the beginning of Monday, and this is the low of the week for Monday. Right, this is the low so far for this week. Tuesday didn't take out Monday's low, so we are not in a trade. Wednesday has taken out Tuesday's low, but it hasn't taken out the low of the week. So it isn't the low of the week yet. So we are technically not in a trade now on NZD-USD. Very simple. You see that it's very logical. You could actually look at the chart and know exactly what you're supposed to do. Right? Let's go look at another pair. So let's look at GBP-USD. GBP-USD is bearish based on this method of determining the trend. Remember, you can find several other methods for determining your trend. And I must state here clearly that both buyers and sellers can be right, or both buyers and sellers can be wrong in this market. Right? And you need to have that at the back of your mind. So GU is bearish. So let's see. On 30 minutes, we look at GBP-USD. So on 30 minutes GBP-USD, this is Monday, right? Bearish means we have to look for opportunities to sell. So this is Monday. It practically took out the previous day's high here, right? So if you want to look for a sell, let's magnify this a little bit more. Right, you're looking at the highest bullish candle. This was the highest bullish candle at one point in time. Price never went below it at some point. Right, price didn't come below it. Then we had this high here, and then price came below it here. Based on our strategy, we would take a trade at this point, anticipating for a sell, and this trade would hit our stop loss. We would have lost that trade. If you're one of those who don't trade on Monday, then maybe you avoid it. I trade on Monday, so I would have had a loss here. And let's go back to Tuesday. Tuesday took out the previous day's high. You can see that clearly. That dotted dash line there is daily high. Tuesday practically took out Monday's high. And here we are. Unfortunately, we got our signal here. Right? So this is the break below the highest bullish candle. We only got our entry on Wednesday. Right? We got our entry on Wednesday for GU. So if we pull this fib, right? We got our entry, we've hit TP1, we've hit TP2. How low can we come? We don't know. All we know that is that if you follow the very first, the free webinars we had about 2 months ago when we looked at our strategy splash, we suggested that we should twin trade. So if you are twin trading, depending on where your penultimate exit will be, either at TP1 or TP2, you would have closed one of your trade and then you're holding the other. So that's GU for this week. Let's look at another USD pair. We've looked at GU, and I think was it AU was the first one we looked at. Was it AU? Yeah. Now let's look at NU. NU is bullish. I doubt it would have gotten an entry so far for this week. So NU is, okay, NU was what we looked at before. So let's go back to AU. AU is bearish, right? So I'll come down here and look for AU. AU is bearish. Again, previous day's high taken on Monday. A signal given somewhere here, which would have lost, except again, you don't trade on Monday. Like I said, I trade on Monday. Then previous day high taken again on Tuesday, signal given here, and we are not in this trade. So we practically have missed this trade for AU. Now let's check one more and call it a wrap and move into what we want to discuss today. So let's look at EU, for instance. EU is bullish, and right off from here, we've not gotten any signal. From the daily, you can even know if you've gotten a signal or not. So today is Wednesday, that's 1, 2, 3, 1, 2, 3. This candle didn't take out the previous day's low, neither did this take out the previous day's low, and today hasn't taken out any low. So practically can see it from your daily, which is why I love trading this way. Pretty simple, right? So as you can see, it kept going. It never came back to take any previous day's low for it to give us an opportunity to buy. So we'll still be looking for volatility this week. Perhaps like last week, most of our trades happened on Thursday. Now let's go into what we want to discuss basically today. So today I want us to look briefly at automation. So by next week, we'll have Prof, who is our in-house coder, take us on some of these things just as a glance. Now, why did many of us come into trading? The reasons might differ a little, but they have a point of intersect. I came into trading, for instance, as a means of making money without being tied to an office, a physical office block, and without, being subservient to a boss that could ridicule me or put me under undue pressure. I wanted to have control over my time and make money at the same time. Your reasons might be slightly different, but I know you are either here to make money or to be able to take charge of your life. When you come into trading, there are different patterns of trading. You could be a scalper, somebody who goes in and come out very, very fast. What that does is that it keeps you glued to your system practically all day. Even though scalping is a very good way to make money, you lose your independence, you lose your time. So it's like if you are someone like me who left a paid job to come trade, quote and unquote, you would have exchanged your boss for your laptop or your phone, as the case may be. Aside that reason, another one is the human emotion. For instance, what has been happening in the crypto market, or what happened in the crypto market overnight, Monday into Tuesday, with the Binance and CZ and SAM having a clash, and what happened in the crypto market. Several accounts would have got blown simply because the traders were trading based on impulse, right? How many times have you entered a trade, it's going in your favor, it pulls back a little against you, and then you jump out, and then it continues going in your direction and gives you, I would have given you 5x, 2x, but you're no longer there because you jumped out because of your emotion. Or the reverse is true. How many times have you had a signal to take a trade, but you hesitated simply because you've got your fingers burnt the last 2 or 3 times, and then price actually goes your way. So I've mentioned 2 reasons. One are emotions, and secondly, timing. One way to overcome this is algorithmic trading. And for your strategy to be algorithmic, meaning that it can be coded and then you can trade it using the code, we generally call Forex codes EAs. So for your strategy to be algorithmic, it needs to have fixed rules that you work with. I'll show you some accounts that trade algorithmically and some of the things that algorithmic trading can do for you. And then we'll go and look at our in-house algorithm. I've chosen to hide some of the details. So since this is being recorded, I'll give you an example. All right, this is a live account, as you can see. And here I'm going to show us something. Let me drag this off a little. The account presently has an equity of about 19K. Let's look at the account history. So I'm starting from custom period. Let's look at all history. So look at this account. If I go down sometime around 11th of July, this account was credited with 9,630. If I pull this down to the end, you would see that this account, just a moment, let me drag this here a little. You'd see that this account had a deposit, total deposit of 14,000 and has made a profit of 4,645. Let's do the math. So this is 4,645 divided by 14,446. The math might not be exactly correct because it started with 9,000, then the balance came in somewhere in between, but this will give us a rough average. Now let's multiply this by 100. That is a 32% account growth. In what period? From July. So let's say August, September, October, and today makes it exactly 4 months. Today, coincidentally, okay, no, not 4 months yet. 2 days more, and to become 4 months. Somebody's mic is on. All right, please mute yourself, Mr. Adedayo. All right, so just look at that. This account is trading using an algorithm, a robot, right? And it's not that the robot belongs to one company and you're giving them money. The robot can be yours. You will put it on your MT4, but you need to have something called a VPS. I'll show us that briefly. You put it on your MT4 and you have it trade for you. The robot is your own. In fact, you can go in there and manipulate some of the settings. Today, I'll be telling you guys how we manipulate some of the settings, how we get the prime settings to use for certain EAs. I'll just show you guys briefly. We'll be discussing that in more detail next week. Right, so this is just one account. I'll show you one more, and then we'll move into something else. So let's see another one. All right, this is another account. It's presently in a drawdown of $20. Let's see the trade. These are the trades running, right? These are the trades running, and it's in the drawdown of, well, the drawdown keeps moving. But let's go back to the history. Let's look at the history. So again, this account started 16th of August with a deposit of $1,000. And you can see how it's taking the trades in beats, losses, and profits are there. But let's look at the history. So between 16th of August, which is going to be about 3 months in a week's time, it's done a profit of 688. That puts it at about 68%. Right? This algorithmic trading. This person can be anywhere in the world doing anything he wants to do, and then the robot trades on his or her behalf. But the person has to take responsibility for the outcomes of the robot. Right? There are several types of robots. There are martingale robots, there are dollar cost averaging robots, there are grid trading robots, there are strategy-based robots, there are breakout robots, right? There are different kinds of robots. You need to understand the type of robot you are using, why you want to use it, and the pros and cons. Some robots have very high drawdown. In fact, almost all robots, several, have very high drawdown. You need to be able to establish how do you know the drawdown, how do you curb the drawdown, and how do you make profits out of them. I must state here clearly that the two robots I've shown you guys now can't be used for prop trading because they sometimes have drawdowns of up to 15 or even 20%. And you know that prop firms don't allow you have more than 5% daily drawdown, and at best 12% in total. FTMO even 10%, right? But again, we are into trading for different reasons. I'll show you one more. I remember I mentioned just one more, but I'll show you one more again, just to let you know how volatile this can be. This is another live account. This is another live account here. All right. This live account is in a drawdown of $1,482, right? If you can see beneath the screen somewhere around here, let me show you with my mouse cursor. You can see the balance there is sitting at 2008, but the equity right now is 1,003. So why is it 1,003? 1,480 something negative for this EA, right? So you can see that this is about 50% or more in drawdown, right? So again, you have to know the risks of algorithmic trading. You need to be able to know ab initio what the behavior of the robot you are using. Some robots can do 50%, 100% in one week, 50%, 100% in 1 month, but it also means you could take a sleep, wake up, and then all your money is gone, right? You need to understand the type of EA you are using, the characteristics of the EA you are using, then you'll be able to put them together and say, okay, this is what I want to do, right? Yeah, so let's look at the history of this particular EA. Look at the history. Let's start all history. All history. So this person started with about $761 sometime around 18th of January, right? But let's go all the way down and see the history of this particular account, trading algorithmically. So far, all the deposits that this person has made is only 809. I'm sure you can see it here. this person has made 809 in total deposits. He's made a withdrawal of 1,700 out of a profit of 3,700, right? If his account balance right now is 2,008, out of which 1,004 is in a drawdown, right? Again, algorithmic. This person is not waking up every morning looking at the chart. He's just pulling it. He's just setting up the EA and then letting it run, right? To be able to do this effectively, you need what we call a VPS, right? You need just a minute, please. You need what we call a VPS. So by next week, we will have one of our instructors, Prof, take us on just a brief on VPS. I'll show you what a VPS looks like. So on my own system, I have quite a number of VPSs. If I come here, you see I use like I have 4 VPS on this system, right? I have 2 others on another system. So that makes it a total of about 6 VPS, and I use them for different things. The ones running prop accounts are there, the ones running EAs that we're back testing, just testing things. There are some strategies, you will test them for 3-4 months before you begin to fall in love with them. So it's not something you just wake up, go to YouTube, watch some videos, and then go put your money in. If you want to trade long term, you need patience. So this is an example of a VPS. I'm logging into my VPS now. All right, so you can see I have VPS. I have about 5 MT4 instance one in here, and 4 different robots running on them, trading and doing whatever, right? So quickly, I'll close this now. Somebody's mic is on. All right, let's move on. So I'm going to take you to an in-house robot we're creating and some of the things you might want to see before we call it a wrap here. So here we have the HPLR. You and I have been discussing about HPLR, right? So we have Prof code HPLR for us, even though it is still work in progress. But the idea is to make it as exhaustive as possible. So tomorrow, when Ty will be taking us again through the HPLR, he might be looking at the use of Asia as our entry. We try to create an algorithm that covers most of the things we look at in Simply Pips. Remember, I told you guys we're going to discuss breakout strategies much later. But for now, we're focusing on HPLR, right? So we have something called like a reset time. At what time should the EA reset itself? At what time do you want to start trading? You know, from 8:30, for instance. If you want 7, you can simply change this to 7, depending on what you want. At what time do you want the EA to take a break and just stop trading, stop looking for new trades, right? Do you want to use bias in trading? If you remember the presentation we had, the last strategy splash we discussed, we looked at trading with or without bias, right? So we had daily setups, looking for setups without bias here, right? So we've been able to go beyond just teaching it as, okay, do you want to use bias, true or false? You choose, right? What time frame do you want to use to determine your trend? Remember when we were discussing earlier today, we were looking at our trend on a daily time frame. So you want to look at the daily time frame for your bias. Are you willing to go for 8-4? Is it going to be daily, weekly, or monthly, as the case may be? Do you want to trade Asia's session? Do you want to trade, do you want to use just previous day high or low? Do you want to maintain previous week swing? Do you want it to be strictly weekly, like the sessions we had yesterday and today is strictly weekly? It has to be high of the week, strictly. We could also use yesterday high or low without considering if it is actually the high of the week. But in this case, we say strictly high of the week. We also use fractals I think we've discussed fractal basically in the first training, the mentorship program. By the way, another mentorship program will be starting in about 2 weeks, and details for how to join is in the group. If you've not seen it, you could always make a request in the group and we'll drop it again. Right, so do you want to use fractal levels? What is the fractal level? You know, so several things. What is the RRR, the minimum risk reward ratio you want? Do you want it to be 2? Do you want it to be 3? I think we discussed that the last free class we had. What do you want your TP2 to be? Is it 3x, that is 300% of your risk? You can always change this. You could make this 4x, you can make it 5x. At what point do you want to break even? So the price is going in your direction. At what point do you want to break even so that even if price comes back, you don't lose, it just takes you out, right? This algorithm considers that. How many times do you want it to take a trade per day? You know, sometimes we go into a trade, right? Let's say we're trying to sell, you sell, then price comes back and hits your stop loss, and then it gives you another entry and goes in your direction. So how many times are you willing to take a trade a day? For those of us who love to trade 5 minutes, you know, you'll be taking like 3 or 4 trades per day. And if you love 30 minutes or 1 hour, you're taking like 2 trades per day, right? And many other things, right? This is what an algorithm looks like. So instead of you waking up in the morning and then practically going to your chart to look for yesterday high or low, and then doing the mental calculation as to whether this is the high of the week or not, you could have a robot do it for you and then take the trade for you if you want to. If you don't want to take the trade, it can look at all of those conditions for you and then send an alert to your MT4, mobile MT4 or email telling you that certain conditions have been met, and then you can now go and take the trade. I'll give you an example of how this EA works as we begin to wrap up today. So let's say we want to trade just using previous days high or low, which is what we've been discussing. So we'll make this true. I want it to be strictly weekly, so we'll also make this true. We want our TP2 to be at about 3R. Let's start with 3R, for instance. I can now say, okay. So let's say we're using ADUSD, and for the sake of time, let's say we want to consider just August, from August 1st till yesterday, from August 1st to yesterday. We want to take our entries from 30 minutes time frame. You should consider the spread as whatever it is right now. So we're going to try to see how this EA will trade if we set it up. So I've put the visual mode to be on. Let's see how this trade will play if we set it on. So pause. You can see it took a trade right there for a sell. And this at this point, it hit TP. I can come here and check my result. It put a sell limit. The sell limit was triggered. It put a sell limit at 1600. The sell limit was triggered at 1702 on the 1st of August. And the trade was closed 7:49 a.m. on the 2nd of August. And it gave us a profit of this. Even though we said the profit should be 3x, but obviously it would have catered for spread. And that is why we have this, right? So if I had said the profit should be 4x, it would have held this thing much longer until it goes. So we have a term called optimization. We'll discuss that next week when we're discussing EAs in detail, right? There's something we call optimization. Very soon we'll be giving you guys EAs. Some of them will be free. Some of them will sell them to you, right? We will give you guys guidelines as to how to optimize. And we might also mention some optimization figures that we have done on our own. For instance, if I'm going 1:3 for AU, it doesn't mean that I should do 1:3. I'm talking about RRR now. risk reward ratio. If I'm risking $10 for $30 for the possibility of making $30 on AU, it doesn't mean I should go to EU and use exactly 1:3, because the optimization figures might differ. So these are some things some people don't know. You just go into trading, you use the same strategy for everything. Optimization, especially when you're using algorithmic trading and not discretionary. So if I had made my risk reward ratio 1:4, it would have held on to this thing and taken it much lower. But who knows, it might not have got it to 1:4 before it makes a U-turn. And this is what the graph looks like. It started out at that point and then shot up. But again, like you know, with many of our strategies, we accept losses. So let's see how it continues. So it's practically traded for that week. It won't trade again until another week or until it gets a new weekly high, right? It won't trade again until it gets a new weekly high for that week. So now the trend became bullish. It picked it and boom, it hit stop loss. It was trying to buy at this point and then it hit stop loss. So see, our graph will drop. We made a loss there. And you can also see it on our result end, right? There's a loss, so the balance reduced. This hard to trade in real life. It attempted to take another buy and again hit stop loss. Let me pause it again so you can see. So our graph came lower again, almost to entry. Attempted to take 3 buys, 1, 2, 3, all his stop loss. Right? That's algorithmic trading. Let's see how it plays. It took another buy and this time it hit TP. So let's pause. So here's your graph again. It took another buy. Notice how one win basically covered for 3 losses. Right? So what does algorithmic trading do? It helps you overcome your personal emotion. If you are trading live on your own and you hit stop loss 1, 2, 3 times, you know, your mind begins to play prank on you. But with algorithmic trading, let the EA do its thing, right? I'll allow this run to the end. I will call it a wrap for today. It's just an introduction to some of the things we'll be discussing in the 3 weeks. So let's see what it does next. All right, so see this, it peaked, it saw a sell signal and set a limit, but price never came back. So if you notice, in all the examples I give, I usually go through all the USD pairs. So if you didn't pick it in AU, it might have picked it in GU, right? Something like that. But you never can know. So this would have been a winning trade, but price never came back to pick it. When we discuss breakouts, you'll see how we would have picked that trade when we talk about breakouts. We're almost coming to an end, but let's let it play out to the end. Here's what our graph looks like. So right now, the EA is checking for yesterday high, yesterday low for you. It's checking if it is weekly high, high of the week or low of the week for you, without you lifting a finger. It's doing all of that. So what happened there? You got another winning trade, right? So notice 1 winning trade, 3 losses, 1 win, 1 loss, 1 win, right? You can come to your report and see, right? It had absolute drawdown of $75, maximum drawdown of 473, which amounts to like 4.55, right? Net profit of 4 something. So this EA would have made this amount for you if you trade it using on only AUD USD, using strictly weekly trades, without you lifting a finger. I want to ask a question as we wrap up. How many of you think you might love an EA to trade for you? Put a 1 in the chat box. If you think you might appreciate the ease that EA bring to trading, let's see a 1 in the chat box. And by the way, I'm putting it out for free here. If you feel you have a strategy that has a very high win rate, please, I'm open to discuss with you. We could fix a time. You need to convince me it is something that has a high win rate, and then we'll code it. We'll code that EA and have it for the group. Yes, I also appreciate EA is doing some work on my behalf. It takes out some of the burden. Of course, I still trade manually, but EAs might just be the way for many people who struggle to trade. Next week, we'll have our in-house coder, the prof himself, take us on some of the things we need to know about EA and trading. So tomorrow, if Taiwo is free, he will be taking us on HPLR, perhaps Asia session or just yesterday high or low, whichever one he chooses to do, still on HPLR. And then next week, Tuesday, we will begin to look at breakout strategies and how we trade them. The last week, we might look at institutional order flow. And then we'll call it a wrap. Prof, any message for us as we call it a wrap today?
Oh, it's good. Personally, I'm almost done with trading manually. I think there's only one strategy I trade manually at the moment. So every other thing have like 4 different TAs running on different accounts. Let them be doing their work by themselves. No time.
Yes. And then you create time for other things. By the way, I'll let this be the first time I'll be announcing it here. So the Simply Pips family is going beyond just talking about trading, right? From January, we will not just be a trading platform again. We are going beyond trading. Late last year, we started talking that we noticed a trend amongst young people in Nigeria and perhaps across the world. I don't have the data for that, but at least I know for my country, Nigeria, that several persons believe they will just stumble into trading and then make it big. And we coined something, we say trading is a difficult way of making easy money. We started mentioning alternative ways of making money that can help you sustain your trading. We discussed several forms of businesses. I think we still have some of the videos on YouTube. So from next year, God's willing, January, Simply Pips will be going wider. We will teach people how to write so you can be freelancers on Fiverr and Upwork. We'll be teaching people how to do graphics design. We'll be teaching people how to do digital marketing. We might even have somebody talking about robotics. We'll have people talking about cyber security. So it's going to be a community of people coming together to learn skills. And if you feel you have a skill you are very good at, digital skill you are good at, please let me know. That's what the next phase will be going into. So we would also try to push towards creating all our strategies into algorithms. So we'll have time to do other things and then trade switch. So I'll call it a wrap today. We'll meet again tomorrow. Yes, somebody asked a question in the group. I promised to teach you guys another way of entry on high of the week and low of the week. Yes, I'll do that maybe for the first 10 minutes tomorrow before Taiwo takes over. Jay, I'll be doing that. Sorry for forgetting. Let's have a wonderful evening, guys. I'll upload this on YouTube. Let's remember to like, share, and comment. Bye-bye.